There are a lot of things that we should be concerned about. In this video, we're going to jump down into the world of Bitcoin, take a look at a few different things that are going on in the space, and let you make your own decisions as to whether you feel bullish or bearish. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe and stay up to date with everything that was going on in crypto. Okay, let's take a look here. We're going to start things off with the OnChain Metrics, and well, we're in net positive now. Okay, so essentially what we've got at the top here is the inflows since the 1st of January 2023 onto exchanges. This is basically Bitcoin going from external wallet addresses to internal wallet addresses when it comes to exchanges. Now we have inflows and we have outflows. Okay, that's Bitcoin leaving those exchange addresses to go to external addresses. Okay, and what we've got is the difference now since the 1st of January 2023 is net positive. More Bitcoin has gone onto the exchanges than has come off the exchanges. This is important because the definition of a bull market is where the demand outpaces the supply, and during those bullish times, your expectations are that more Bitcoin leaves the exchanges than goes onto the exchanges because there's demand soaking it up, and no one wants to keep their crypto on the exchanges, not your keys, not your crypto, and all that kind of stereotypical stuff that you hear in the space. Has really good meaning, essentially, that if you want to be making sure that you're really protected and you're minimizing your risks, you don't leave your crypto on exchanges. Therefore, if there's an increase in demand, there should be an increase in outflows from the exchanges. And instead, we're in the definition of the bear market where the supply outpaces that of the demand. You see more in the way of inflows than you see on the way of outflows. And therefore, you end up with this scenario where net difference is positive, more Bitcoin on the exchanges than has come off. This is also visible from our line graph here since December the 18th. We can see that Bitcoin was going on. It came off a little bit, but it's coming back on again. It's basically just going sideways. There's lots of transfers of Bitcoin between participants. We also see up here the net difference between the inflows and the outflows represented as a 30-day average. Each one of these bars on this graph is a 30-day average of the inflows and outflows difference, right? Essentially this number up here that's currently only 84 Bitcoin positive. Over this side, we can see on the 30-day average just how flat this has been during this entire move to the upside. Essentially, there's people who have been selling their Bitcoin to unknowing investors, okay, and knowing that potentially this is not what it seems. So when we take a look at this, we can see that we've had 1.3526 million Bitcoin going onto the exchanges since the 1st of January, and we can see 1.3525 million coming off the exchanges since the 1st of January 2023, and therefore the difference is 84.58 Bitcoin has actually gone onto the exchanges and hasn't come off. Okay, so essentially there's more Bitcoin on the exchanges now than there was at the end of 2022. Okay, considering the price of Bitcoin is significantly higher now, that would beg the question, is supply and demand actually making a lot of logical sense, or is there something actually different in the background data that's driving the price of Bitcoin to the upside if it isn't demand driven? And so the balance between the supply and the demand is an interesting one. It's one that we have to kind of focus in on, but we can go deeper than just this. Obviously, we have our line graph for the inflows and the outflows, and we can go through this kind of stuff. We can see that in the last 24 hours, it's actually reasonably balanced with 33,000 coming onto the exchanges and 33,000 coming off the exchanges. There's obviously a difference here of a few Bitcoin. It's 33,117 going on and 33,067 coming off. So you can kind of see a small difference. But the day before, we had 45,000 Bitcoin going onto the exchanges and 38,000 coming off. The day before that, it was 37 going on and 32 coming off. The day before that, 28 going on, 26 coming off, and so forth. So over a period of time here, the last few days, as price is pushing up, we've actually seen more Bitcoin going onto the exchanges being made available to sell. Now, as we kind of jump into the wallet counts, we can take a look at the retail-sized wallets. Okay, we can see that the Krill, this is over 0.1 Bitcoin. I've actually decided to be shaken out a little bit here or taking profits just up the top end here. We can see that the Shrimp's over 1 Bitcoin per wallet, and those wallets have been decreasing as well. It means that the Bitcoin's been flowing onto the exchanges. We can see this. We can also see that the Dolphins actually did drop down a fair bit. We were around 155,472, came down to 155,274, but it did have a slight uptick here up to the 352 area. But again, we can kind of see that there's been pockets here within the retailer side where they've started to move crypto back to, or in this case, Bitcoin back to the exchanges. Not necessarily saying that they've sold yet, but they were clearly thinking about it. They were in external addresses. They've moved to the exchange. You're only going to do that if you want to make that Bitcoin available to sell, or if you want to make people believe that, you know, you're going to be going down. But in a retail point of view, I think this is literally just the price has moved up very significantly. It's probably a good idea to take some profits. And I think that's what you're seeing here within these retail wallets. Now, it gets more alarming. Let me get rid of that. It gets more alarming when we come up into the institutional grade wallets, okay? These wallets, the black line, by the way, guys, I should always say this. I say, because I talk about this all the time, I forget about the basics for anyone who's new to the channel. The orange line is the price action. The black line are the number of wallets that have over said amount of Bitcoin. So over here, the sharks are over 100 Bitcoin, the whales are over 1,000 Bitcoin, and the Kraken is over 10,000 Bitcoin. What do we see with these institutional grade wallets? Well, we see them all decreasing. We saw that the sharks pumped up before the actual, so that the wallet counts with over 100 Bitcoin increased dramatically. It pumped up dramatically before the price action actually moved up. This, as I often say, the sharks in my mind, in my opinion, are the traders, right? These are big institutional level traders who are trading Bitcoin, and they look like they've made an absolutely fantastic run here. They purchased up pretty much from the 11th of December. Okay, they obviously clearly saw something in the data. They purchased up, and then price of Bitcoin really started to rapidly move, probably around the 10th or 11th of January. You can see that these guys now have been taking profits. You can see them kind of just going sideways and decreasing the number of wallets. Right now, we were peaking up here at the end of December at 16,138, and now there's 16,046 wallet accounts that have over 100 Bitcoin in them. So we can kind of see that the idea here is that they purchased up, they rode this up nice and high, and now they're taking profits, or they're moving to the exchanges in anticipation of taking profits. On the whale side of things, we can see these coming down again, right? We had an all-time low in wallet counts in this bear market for our whales. Our whales previously, over in November, were rocking 2,092 wallets, and now they're down here at 2,027 wallets. So we can see that a large number of institutional investors have come out of their positions or moved it to the exchanges and have sold into this pump to the upside. This is pretty common. You see this with these institutional players all the time. They look for the liquidity. The liquidity was created through FOMO of this move to the upside, and so they come out of their positions. We can take a look at this at a 365-day view. By coming over to this one, we can see here that there was a low during the November lows, right? November lows were here, okay, in the 10th of November 2022. The black line just basically sold off, right? And they were selling all the way through until around about the 8th of December. They slowed down. They started to kind of just go sideways from here. And then they've come down into new, fresh, lower lows in February. Okay, so what we have to kind of consider when it comes to these wallet counts is, are these whale investors, these institutional grade investors, making catastrophic mistakes? Okay, we said this before when it came to the June lows, that if you remember all those influencers on the various different social media platforms telling you that the bottom was in June, I was sat here and I was saying that the wallet counts are going down. And if we believe that the low's in June, then we also believe that these whales, these institutional players, are making catastrophic mistakes and essentially are selling the bottom. Well, the same thing can be said about the November lows. In November, we had the local low for Bitcoin, and everyone on the social medias are getting themselves all giddy and excited. The bottom is in. And yet at the same time, what are we seeing? Well, we're seeing the institutional investors continuing to de-risk and continuing to come out of their positions, even at these November lows, right? So again, the same concept here is, do you think that these institutional investors, these billionaires and multimillionaires, are making catastrophic mistakes and are selling at the bottom like a lot of people would led to believe back in June? Or do we think actually there's more lows to come because, well, they're not buying yet? And until they do buy, I don't think there's really enough demand or money really entering into this space to take Bitcoin to the upside. We have to understand that these participants, these institutional investors, are the ones that are going to be taking Bitcoin to those next next levels. And until you see them entering into this space, it's hard to get too excited. So when we come back into our wallets for those institutional level investors, and we can see, the whales are coming down and continue to come down, we can also take into consideration the larger size wallet, the 10,000 Bitcoin or more. And it's the same concept. You can see them coming out of their positions even whilst this price is moving up. This is exit liquidity that is being created for these institutional players. And so we don't want to get ourselves too excited thinking that we can go straight to the moon when these participants are the ones that actually are the ones that are going to take you there. They're the ones that are going to provide you that initial surge in the price action of Bitcoin that gets retail to FOMO in and take it even further. Until that happens, really, we should reflect on what's actually going on here. The price has moved up because Forex traders were dumping US dollars, ditching and dropping down the DXY, the dollar index. And as a result of the DXY dropping down, you needed more dollars to buy your cryptocurrency assets. Therefore, prices artificially increased. You got to bear in mind the people who are going to be the ones who are going to, how do I articulate this, benefit the most from this move to the upside. It's market makers, it's institutional players, and it's not really the retailers. The retailers think, oh, we're in a bull market, we're fantastic, we're going to the moon. And in reality, the situation is the underlying data hasn't changed. Fundamentally, at a bigger macro level, it's pretty much the same as it always has been. The only difference here is that the DXY has come down due to the fact that dollars are being sold off for Japanese yen, euros, or even pound sterling, right? Essentially, that's just making and devaluing the USD, which our assets, unfortunately, are paired with stable coins like USDT, USDC, BUSD, although people are coming out of that one. But you kind of get the idea that if we continue to kind of value things in these in dollars, and the dollar value and the dollar index is decreasing, then we're going to have to kind of maybe think about what's causing the DXY to decrease and why cryptocurrency assets are moving in the way they are. Now, I'm not saying that it's just DXY driven, because it isn't. There is pockets of FOMO from retail investors who believe the bottom is in the same way that we saw previously back in December, actually it was June, 2022. So just bear in mind, if I actually come out of this and zoom out on the Kraken size wallet, this is what's been occurring. Here is the November lows, right? And what do we see? Well, we see these guys basically coming out of their positions, right? They've been bouncing around a little bit. They actually can see here, they're starting to accumulate around here. But again, I think these guys are going to dump on the market in the same way that they did back in 2018, which looks like this. They accumulate during the bear market, they fluctuate around a little bit, and then flood the market with excess Bitcoin to bring in the actual lows. Now, during 2018, this was the bottom according to many influencers on social media. Then this was the bottom. Then this was the bottom. And by the time we get to this flat period over here, retail investors just absolutely had enough. You can see that whale investors were not participating until this flat period here, and they were only participating in this flat period here because this is where the retail investors were selling during this period right in here. And then, of course, the Kraken size wallet, the big institutional players, they bring the price down, shake out as much of that retail money as possible, and then bam, from there you can then go up into a bull market. Okay, and of course you can see that whale investors are accumulating during this entire thing. They come out a little bit around here, just exiting out, grabbing some liquidity, and then pushing back up again. Okay, so it's important that we understand what makes this market move. It is supply and demand driven, just like any other market, and we don't want to trick ourselves into thinking that there's a huge amount of demand when in fact what we're really seeing here is essentially inflows and outflows that are being matched up, or at worst case too much supply drowning out any demand. We can see that we're net positive on here in since the 1st of January 2023. So again, it's not looking bullish to me. Now, from a charting point of view, we can see that we did do this 5-wave structural move to the upside. I still think that we're going to see a lot of volatility in and around this ranges. Do I think we're done? Not necessarily. I would say that we still have some potential to the upside overall. Now, from a bigger macro piece, we can kind of take a look at this and say WXYXZ potentially. That would be best case scenario in my opinion, considering we're only WXYXZ going up. What we are not doing is 1, 2, 3, 4, and 5. We're not trending up. From an Elliott wave theory point of view, we're just WXYXZ, and therefore we can come down into a Z wave if we needed to. Not a guarantee, mind, because we could just be WXY down here, or even better, just a worst case actually would be that we're WXYXZ here, and then we come down in into another WXYXZ, for example, like this, and we're really then, coming down into a whole world of pain. So I think there's a lot of different things that we have to consider, and the bigger pieces of data are the ones where they're indicating to us that we haven't really seen the institutional level investors jumping into Bitcoin even after we hit $15,000 BTC. Therefore, my expectations are this could be a dragged out bear market that takes us into those significant lows further down the line. There's lots of things to consider, lots of things to kind of bear in mind and balance out. It's great that we're in profit, but we want to reflect and we want to understand that on a bigger macro, things are not looking overly great. We can see down here that we did have the hidden bullish divergence, so we have moved up into this Z wave, and like I said, it's still possible that we do move up a little bit more, because coming down on here, it does look like we potentially do have to have a zigzag pattern. And let me just go ahead and remove those ones off. Okay, and this zigzag pattern could take us up significantly higher yet. Okay, so if we come down here, we can see that we go A, B, potentially down into C. That would be a 3-wave corrective structure. So a 535 could be something that we see here, with another 5-wave pattern taking us up maybe towards the $26,000, $27,000 range. So again, I'm going to hold out to see if this plays out, because this also could be a part of a flat corrective structure. So there's lots of different ways that we see this 5-wave, but this is one of the scenarios that we can push up higher, and the more bullish one. Now, essentially on our daily chart, we are heading up into the overbought area. We're almost there. We can kind of see that right as we kind of come back up into this range up here. Okay, so we're up in this one. Okay, that's good to see, but we're also high up on this overbought area, just like our weekly is up in the overbought. Okay, so that's looking pretty interesting. Now, from this point of view, as we kind of think about this move to the upside, we want to consider, where the volume is currently sitting. It's a slight increase in volume here as we have this bullish, hidden bullish divergence. So that's interesting to kind of see that mapping up nicely. The RSI is quite high, so that can come down. And as I said, on our daily chart, we had that divergence as well, right? So everything here is kind of lining up for thinking there's a limited move to the upside and a bit more room to the downside overall. And again, higher highs and higher lows have a tendency to break to the downside. We kind of say that all the time. And if we were to draw this out on a slightly bigger, more kind of macro level, let me just see if I can find my parallel channels, then we can argue that we've kind of got to come down. Let me pull this in to around about here. You can kind of see that we've been doing this one slightly bigger than these smaller ones that we've been doing, and that's the bigger kind of fear that I have, is that it's a big corrective structure that allows us to then come down into those lows. At the moment, I'm still optimistic that we hold the 12, 13, and maybe even 14K areas. But until those institutional investors are buying, I'm not optimistic. More so now than ever, I think, considering how high this pushes. Sometimes high is good and sometimes high is bad. And considering the structures that we've been seeing from an Elliott wave theory point of view, it to me does not feel like we are in a bullish market whatsoever. I'd like to be wrong on that, because I want a bull market. So I would love to be coming back here at some point in the future and saying, look, I was wrong. The bottom was in and it's fantastic. We can now go into this bull market, right? And we can enjoy it. But at the moment, at this point in time, I'm not getting that vibe from the data. The data to me looks more bearish than bullish. But let me know what your thoughts are down in the comments below. Really interested to get your thoughts and opinions on it. Other than that, guys, I will leave this video right there. Smash that like button. I do appreciate that. If you're new, subscribe and join us down in Discord, linked in the description below. Until the next one, have a fantastic day.